What is consumer spending? That's a good place to start always when you're talking about consumer spending. Well, consumer spending is the total money spent on final goods and services by individuals and households for personal use and enjoyment in an economy. But why is it so important? Well, number one, it directly affects a country's GDP. In fact, if we look here, this is the US 10-year chart on US personal consumption expenditure as a percentage of GDP, which is gross domestic product. That is the market value of all the final goods and services produced and sold in a specific time period by a country. As we can see here in this chart, in reference to the US, consumer spending is currently 68.41% of total GDP. That's about the average in the range of just maybe slightly above over the last 10 years. And that is a very significant part of the economy as a whole. It can certainly serve as an indicator of the general economic health of a country. Now, the consumption of final goods is the ultimate motivation for and the result of an economic activity. This is because companies produce all the goods that individuals consume. It also shows the overall consumer confidence in an economy. Consumer confidence measures how optimistic consumers or customers are regarding their financial situation and that of the economy. This means that high consumer confidence can lead to higher level of spending. So let's look at consumer spending as an investment indicator. Real GDP, which is an inflation-adjusted measure that reflects the value of all goods and services produced by an economy in a given year, often is considered a key economic indicator to watch. If consumers spend less, they provide fewer revenues for a given business or within a given industry. Companies must adjust by reducing costs, wages, or innovating and introducing newer or better products and services. Companies that do this most effectively earn higher profits. If they're publicly traded, they tend to experience better stock market performance. For companies that do not or cannot, the opposite is also true. So let's quickly look at bellwether companies for an indication of where the economy is at present and where it may be headed. A couple report this week. The first is BJ's, and the second would be Costco. BJ's is far smaller, but it does give a good broader economic outlook on the U.S. economy. Thursday, Costco will report Thursday afternoon. We'll take a look at those numbers from Costco next week. BJ's Wholesale Club Holdings, Inc. Let's review what they talked about in their conference call, which was this morning. On BJ's, they reported first quarter results on Tuesday morning that were a bit shy of their earnings estimates. Earnings actually matched estimates, but the consumer or this comparable, same-store sales were shy of estimates. They were supposed to come in around 5.7% for the first quarter. They came in at 5.9%. So didn't miss by much, but did have a miss there. But it was the commentary from BJ's leadership that offered something of a bigger picture for investors trying to make sense of the consumer in the U.S. economy right now and overall. Management continued to suggest that the consumer is growing more cautious, while the primary factor driving that caution is inflation. Here are some quotes during their prepared remarks from the earnings call. Their CFO, Laura Felice, said that the company is dealing with an increasingly discerning consumer environment. The CEO, Bob Eddy, referenced the theme of trading down, which dominated big box earnings last week. He stated, everybody wants to save money. Everybody feels like it's a bumpy economy out there right now. Finally, the CFO went on to say, as we sit here today, we see a consumer that is continuing to visit and spend in our stores. On the margin, while they are spending more with us, they are also being more choosy with the dollars and allocating those dollars in favor of necessities. Like I said, I was at Costco this past weekend. I'll say anecdotally, I saw the price of chicken breasts. These are organic chicken breasts. A package was $50. But the non-organic was $30. And I found myself thinking, do I really love my family that much? And what the hell is organic chicken anyways? Is anybody even checking to see whether the birds are what they're really eating? $20 can make a big difference every week. And the thought of trading down in this respect entered my head. Consumer spending is a huge part of the overall economy. And if the consumer pulls back spending, there will be repercussions for economic growth. We keep hearing of a recession, but we're still waiting for it. But there are more signs of a slowdown. And again, you're hearing it this week from the management of BJ's Wholesale Club, and you may hear it from Costco. We'll review that next week.
Yeah, like I was reading an article the other day, basically kind of highlighting the same thing that, Walmart is potentially a top pick right now because consumers are reevaluating their spending, and generally, Walmart does have lower price
That's from the
goods.
playbook of necessities, and yeah,
Yeah,
Walmart
yeah,
offers lower price necessities. You hear that all the time when you're potentially entering a recession, which may or may not ever happen.
totally.
But
And
yeah, I mean, have you experienced any time where you guys are like, I might buy this, but I'm going to look for the lower version, like trading down? That does affect. So it may affect your more premium luxury goods as we see going forward, and companies that are exposed to that may see weaker results going forward. Aaron, have you had any cases where you're like, I'm not going to buy this and I'm going to substitute for not going to buy Y, I'm going to substitute for X? You don't care.
Yeah, well, here's the thing is that my wife does most of the shopping and she's
Mm-hmm.
very price sensitive. Like she's like
Yeah.
her thing is that she's always trying to find like the good deal.
Yeah.
Um
Regardless
yeah,
of
I
the
mean she's
economy.
gonna yeah,
That's what you should
and
be
that's
doing.
in
Yeah.
any economy, right?
Yeah.
Like I mean she has a huge shoe collection, but in her, to basically give her some credit there, she's able to find like pinpoint really good deals on them, right? So yeah, I mean, I would say
That's
we're
what she
pretty price
tells you,
sensitive.
right?
I mean, I think that there's obviously like there are some people in society that they have enough money that a change in the economy isn't going to affect their spending that much, and then there's some people at the lower end of the economic ladder that they weren't really buying a lot of those luxury goods anyways. But it's the people in like that middle class where it's when the economy is doing really
On the
well,
margin,
you
you
can afford to
substitute
treat
out. Yeah.
yourself a little bit. And now that the economy, now that there's more uncertainty, I would think, I'm surprised we haven't seen it more yet.
Yeah.
You would think if this continues, you're going to see more people tightening their belt strap. I mean, Brennan showed that breakdown of the mortgage market, how
yep.
mortgages are expanding out. So we're seeing how people are affording, like why we haven't gone in.
That's allowing people to continue behavior they should not be continuing. That's an issue for
Basically,
me.
it's rather than, okay, interest rates are higher, now we have to tighten our belt straps. It's like, well, we'll just extend the amortization out significantly to reduce, but that only works for a period of time.
And
So
that pain is lagged too. Like there was actually a I guess a BNM Bloomberg article that was posted last week, and my friend sent it to me and was like, "Hey, look, we're ahead of the curve on these amortizations getting extended." Either way, there was comments made by the Bank of Canada, and they said, and I'm quoting from this article, about 1/3 of mortgages have seen an increase in payments compared with February of 2022 before the bank started its tightening campaign that has boosted rates by 425 basis points. By the end of 2026, nearly all mortgage holders will have seen their payments increase, the central bank said. If mortgage rates evolve in line with current market expectations, the median payment increase over the 2023 to 2026 period will be about 20%. So, I mean, we are seeing that lag, and it's slowly going to hit the economy. Also, in this article, it was also talking about just that the average individual that is buying a home between 2020 and I believe 2021 has much more credit card debt now, and is resulting or having to go towards credit card debt, where anyone who bought a new home between 2018 and 2019, again I'm paraphrasing here, didn't have as much credit card debt essentially. So we are seeing, this is slowly lagged. I'm not doom and gloom or anything. The economy might just continue to clip along. But Canadians and people are starting to feel the pain somewhat by rising costs and rising interest rates.
yeah, sometimes it takes a while, but
Mm-hmm.
Yeah. It should be unavoidable at this point. They're trying to have people avoid it by extending, but like Aaron said, at some point you have to pay the piper, and
Yeah.
we should see that at some point. We got to
Mhm.
make sure we're adjusted in our portfolios to deal with that over the long term. Good businesses, quality management teams, good cash flow, good balance sheets.